Hi. So today I'm going to tell about a strategy which is generally used for long-term investment, or you can say positional trading, in which we are looking to buy stocks once they have given a good rally. So what we're looking for is we are looking for a stock which has given a good rally of at least 15 to 20%. And generally, what I've seen is after they give a good rally, they would do a consolidation for few candles, um, and during that consolidation the important thing is that the volume should come down drastically, and once the volume again rises and along with that there's a breakout of the previous consolidations high, that is when I will go for a buying trade. So let me show you a example. So let's say we can clearly see that there was a good rally here, and again it went from almost 420 levels all the way till 560 levels. So almost 30% rally, 30% rally. But now what I'm looking for is like a consolidation. So this is where we can see a consolidation happening, and during the same time we can see that a volume has also reduced drastically, right? So this is a purely price action strategy where we are not using any indicators. Now what I'm looking for is once this consolidation happens and then I am looking for a big candle. So you can see that there is a big candle which is this one, the green candle, and during the same time, very important to notice the volume here. So during the same time the volume has increased drastically, so that means that there is renewed interest in this particular stock, and again the stock can go up pretty quickly. And apart from that, very important to see is that what I've noticed that generally the consolidation will also have like a resistance level. So this big candle should break that resistance level. Most of the time it will. So once it breaks this level, that is when I will go for an entry. So I can probably buy either at the closing price or at the high here. So this can be my entry. Once I've taken my entry, I'll generally put a stop loss of about 5%, in this particular stock, and then I'll go for at least 1:2 or a 1:3 trade. Okay. I can even go for a pyramiding trade here. So what that means is, let's say I've taken an entry here. After again there is a good rally, and then I see few candles again happening like this, and again there's a big green candle. This becomes my second consolidation. I can go for a buying trade again, and I can add more quantity here. So that's also a very good idea to do that. As I said, I will have a stop loss of 5% and a target of 1:2 or a 1:3. Apart from that, I will also look at the what is the previous important zone. So we can see that this is an important zone here, and chances are that the stock can come here, and once it touches this point it can reverse. So apart from 1:2 1:3 risk to reward, I will also keep a note of what is my previous important swing high, and once it is near to that swing high, I will anyway exit my trade. So this was one example. Let's take another example of power mech now. Again, what I'm looking for is an initial movement. So you can see that there's a good initial movement happening here, almost from 1800 levels all the way to 2400 levels. That means about again 20-30% movement. Then I get this consolidation, a very clean consolidation happening of almost about 10 days, and during the same time the volume has reduced again. Then I find a very big candle and a very good volume. So this is giving me a confirmation that yes, the market can still go up. So I can buy here with a 5% stop loss, and again we can see that the market kept going up. Now again, if I'm looking for a consolidation, let's see if I've got a consolidation. This is where I can say that it's kind of a consolidation, because we can see that the volume has dried up here. So again, but now problem is that after this consolidation, I don't have a very big green volume, right? I don't have a very big green volume, so I will not be able to add on to my quantity. Let's see if there has been any previous important levels. No, the stock is making all-time highs, so we don't have any previous levels. So all we can trade is based on the risk to reward, which is at least 1:2 or 1:3. Thank you.